Well, SpaceX makes headlines both on Earth and in space. A discarded Falcon 9 rocket stage crashed right into the moon after orbiting space for more than a year. Scientists say the impact could provide insights into future lunar missions and even the topic of space debris. Meanwhile, SpaceX shares sank after the company reported a sharp jump in AI-related spending. Capital expenditures surged to $18.4 billion in the second quarter, with much of that investment going toward AI infrastructure. Let's talk about that live with CBS News business contributor Javier David. So, Javier, what is it about the company's AI spending that caused investors to become a little bit nervous? We are, after all, in the season of AI investments.
Absolutely. So one caveat, you have a stock here that's under heavy selling pressure, primarily because there was this post-lockup IPO, the post-IPO lockup that was expiring. So that's allowing a number of shareholders to kind of unload and cash in if they want to. The earnings highlights were actually pretty constructive, but the stock is really now confronting, as you mentioned, all the reality of all this spending that the market has to navigate, and the market is being very fickle. One hand, SpaceX saw overall revenue surge by almost 100% year over year. But there's a lot of strength in the Starlink business and the segment that oversees AI and the Grok solution that you see on X. Elon Musk is expecting the company to post $1 trillion with the T revenue by 2030. That's a little bit ahead of estimates. But on the other hand, like most of these tech AI adjacent companies, SpaceX has to spend a lot of money to make that money back. And the problem is we've reached this juncture where investors are very skeptical that they have, more skeptical than they have been previously. And it's kind of this sell first, ask questions later environment. So hundreds of billions of dollars is being committed to this project. There's no tangible way to discern when it's going to yield the return on investment that investors are demanding. So SpaceX now has the same problem that everybody else has, which is they're shelling out a lot of money to herd the cattle, but the markets are demanding, where's the beef?
All right. I understand that very clearly. Moving on to the economy, private employers added, 44,000 jobs in July. That's well below, though, what economists expected. Walk us through that, because health of labor market tends to be what also is one of the metrics informed by interest rate decisions by the Fed.
Yeah, so ADP should be kind of taken with a grain of salt. There's a lot of variance when you compare their data, which comes out like a couple of days before we get the monthly government jobs data, which we're expecting on Friday. Their methodology is different. It doesn't capture all of the elements of the Labor Department's numbers. It's not my favorite indicator personally, but there is some utility in it, which is underneath the headline. It's showing their pockets of strength in the labor force, still mostly synonymous with the low fire economy that we've been talking about. Construction workers, their data showed is getting an ample pay boost. There's strong job creation in under industries like education and health services. That much is consistent with what we see in the monthly payrolls data, and other private data shows similar pictures. Strong growth in wages. It's positive, not enough to spark inflationary pressures, but overall, this is a jobs market that is not gangbusters, mainly because there's an overhang of uncertainty from the Iraq war, inflation, tariffs. It's not falling off of a cliff, but job creation is modest and consistent with a sort of steady yet unspectacular growth picture that we're seeing in the economy.
Okay, Javier David, thank you. Good to have the conversation.